unfortunately too, if they don't see the world the way it really is, they assume that the solution or the solutions that are presented to them by the central planners and the politicians.
Correct.
They just take that at face value, is that, the solution for bridging the inequality gap, if you will, is just to tax the rich. We'll just take everything from the rich and we'll just let the politicians take what they want and then just give the table scraps to the poor, and somehow that will reduce the wealth gap. But as Margaret Thatcher said, that'll just make everyone equally poor. What we want to do is we want to make the poor and middle class, we want to make them richer.
Correct.
And for whatever reason, it's because those people don't have that financial education that you've been talking about for the last 30 or 40
Correct.
years.
You don't get it at school.
Yeah, they assume that the way that you again, bridge that gap is by taking from one group, as though somehow there's like this fixed pie, and we have to realize that in free market capitalism, that pie continues to grow and grow and grow, and that brings up the quality of life for the people at the bottom. What happens is these financial planners, I'm sure you know this, yeah, exactly.
Who stole my pension, my 401k?
But see, this is very important, because what the game these financial planners play is they only show you charts going back to 1981. And this is when Paul Volcker raised rates. So since then, we've been in a down cycle in interest rates. And you can say the stock market always goes up, right, if interest rates are always going down. But what happens when interest rates start going back up? And usually the cycle is about 30, 40 years. So if you look at charts of the stock market going back to 1927 to 1980 or 81, adjusted for inflation, it was pretty much flat. But see, they don't tell you that.
Right.
They just cherry pick the data.
Of course.
They want to give to you in order for them to collect their fees.
But something even worse happening is the last crash was, let's say, 2008, when the repo market reversed and all this stuff. And most of these financial planners and real estate brokers, all they know is a rising market.
Yeah, that's right.
Since 2008, we've been nothing, and happy days are here again because they kept dropping interest rates. Real estate went up, stock market went up, bond markets went up.
Yeah.
And we were just talking to Ralph Powell, and he said the problem with that is that the bull goes up the stairs.
Yeah.
The bear comes out the window. Ralph Powell says when it comes, it's 4 months. Yeah. That's how fast this bear is going to go out the window. So,
and my objective might help some people kind of think about real estate or assets in a different way. The first goal that I had when I retired is just to look at my monthly expenses and say, how can I get my money to cover those expenses?
Yeah.
You see? And so how can I get my cash flow to cover these things? So then I know that I'm never drawing my savings down.
Right.
And I think it sounds easy and it sounds commonsensical, but very few people just kind of connect those dots and realize that if they can create enough cash flow with their portfolio to cover their monthly expenses, that is when you're financially free.
Yeah, that's a cash flow game. Out of the rat race, all this stuff, you got $10,000 a month coming in, you got $7,000 in expenses, $3,000 net, you're free.
Yeah.
And there's tax breaks for it.
Mm-hmm.
But in school they get a 401k. I'm going, are you kidding me?
Right.
But this is the challenge for the Rich Dad Company. Like, I was listening to Dalio and all the very smart guys, but they're all stock guys.
Mm.
They always say, get a diversified portfolio of stocks, bonds, mutual funds. I don't have any. I mean, I have companies I took public myself.
Right.
I own the stocks, and like silver companies that took public and all this. My stocks I control. And then we make most of our money from Kenny. Not most of it, but we get income from 13,000 or 14,000 rental units with no equity in them. It's pure debt, and we pay no taxes. And then we invest in oil wells.
Right.
And we don't invest in oil companies, oil wells. And so when Biden took the Keystone XL pipeline, he cut that project. Oil went from $30 a barrel to $130 a barrel, 400% raise in one day. I actually liked Biden for about 20 minutes.
Yeah.
But unfortunately, as you know, George, the problem is higher oil prices cause higher fuel prices and higher food prices, which is going to wipe out the poor and middle class.
Yeah. because they're the people that get disproportionately affected because a higher percentage of their income goes to those things that are going up in price.
And they want to tax the rich, but there's too few rich.
Yeah, well, what they don't... Yeah,
we don't pay taxes anyway.
Yeah, the problem with that argument, I've been hearing that a lot lately. I've been hearing that in Davos.
Here all the time.
Yeah, we talked about that prior to recording, is the cure for inflation is not more money. That's usually the cause of inflation or consumer price inflation. The cure for consumer price inflation is more stuff.
Yes, produce more.
You got to produce more stuff.
Yeah, produce more oil. Guess what?
Yeah, so if you're just taxing the people who are producing, that defeats the purpose. Let's look at China starting to do deals with Saudi Arabia, and I think most likely
yuan.
Russia in yuan. Okay, so what most people just see that and they say, oh, it's kind of the deterioration of the dollar. But no, there's far more to it than that. So before that happened, China would need dollars to buy the food or the commodities, the energy they needed.
The oil.
That's right. So they needed to earn those dollars. So that's why they would export all these items that we buy at Walmart, because they want our dollars so they can go buy the oil. So they're in a very difficult position there. But if they start doing these deals in yuan for oil, now all of a sudden they can print the currency to buy the oil. They don't have to earn it. You see,
smart for them.
But what that means is now the United States doesn't have as much leverage over China as it once did.
Right.
So China can start gradually. It doesn't happen overnight, but they can start to tell the United States to pound sand. And if we can't get our stuff from China, where are we going to get it? We're not producing it here internally in our domestic economy. So then, where do we get it? We get it somewhere else at a much, much higher price, if we can get it at all. If you control the food, you control the people. If you control the energy, you control countries. And if you control money, you control the world.
That's right. And that was what Rothschild said. I care not who makes the rule.
Right.
As long as I control the money.
Yeah. And I think that's part of their objective.
That's real gold, and that's real silver. This is $2,000. That's concentrated money.
Yeah.
And this here is about $35.
Yeah, but more importantly, this has maintained its purchasing power over the last 5,000 years. So you can buy just as much stuff today with this little gold coin as you could have 5,000 years ago. Back in the late 90s, everything was .com, and they were getting these billion-dollar valuations. And it is true that the internet was the future. Yeah, it is true that the internet was the future, but not all those companies. 99% of them go bust. And I think it'll most likely be the same with crypto. There will come, maybe Bitcoin, Ethereum will come out winners in the long run and will be here. I don't know what purpose they'll serve. I don't know if they'll be transactional in the case of Bitcoin or be more of a digital reserve asset, store value. I'm not quite sure, what place it'll play, but I think it'll most likely play out the same way the dot-com bubble burst in the 1990s.
Before you leave, we have an important announcement. If you are interested to receive weekly stock market commentary with proper buying, selling, profit-taking alerts, then consider joining over 4,000 members strong Discord through Patreon. Check out this last week commentary where we warned investors of upcoming volatility in the market and highlighted opportunities to take benefit, like buying SARK Fund, which is now near its all-time highs. You can also learn options trading and join our weekly live session where we teach how to trade options. All these benefits are available under this $20 VIP tier instead of the regular price of $120. Join now if you want a little helping hand.